Welcome to the SaaS Revolution Show. Christian Gabriel, co-founder and CEO of Capdesk. Welcome, Gabriel. Christian.
Thanks a lot, Alex. Thanks for having me.
Yeah, so good to have you on the program. See, we're both sweating a little bit, not because we're doing a podcast, but it's scorching hot in the UK today, and has been for this week. So we've both got the windows open, having a little bit of breeze, and hopefully I don't make you sweat any more than you perhaps already are, or I'm presuming, like with these really tough questions that we've got coming up.
Hope you can keep that promise.
Yeah. Let's see. Generally, I'm a fair interviewer, I would say. But Christian, I know we've had a sort of like brief chat before, but first time on the podcast. Tell the audience that are listening just a little bit about who's Christian Gabriel as a person.
Yeah, of course. So yeah, Christian Gabriel. I'm 30 years old, live in London now, originally from Denmark. I am not the usual fintech founder as such. I kind of was stumped into fintech without really knowing it. And if you'd asked me like 20 or 10 years ago if I thought I was seeing myself in finance, I'd definitely said no. But some reason, somehow, in some way, I found myself in fintech. It's great. Love tennis. That's pretty much all I do. I love the outdoors. Was born and raised in the countryside of Jutland in Denmark. So I love the outdoors, and now live in London with my fiance Anna. So that's a little bit about me. I studied computer science and communication at university while I was working for an investment platform, and I suppose. Yeah, so I don't really see myself as a finance person, even as not a person, more like somebody who's curious and a little bit more creative, perhaps, than most people in the space. That's my superpowers.
How did you end up in the UK? Was it your fiance? Was it the startup, the business, or none of the above?
Yeah, it was the startup. So back then when I founded Capdesk, I was like 25 and 24, 25 actually, and the board told me, well, I looked for where like there was most customers, and that was the UK. So I was supposedly in a chapter of my life where I didn't have that many responsibilities. So I just said to Anna, my girlfriend at the time, do you want to go to UK? And then a month later we went, it was before Brexit. So we literally just went to the UK, and yeah, it wasn't very, very hard to do. And we ended up staying here for quite a bit.
Cool, good to hear. I think I'm assuming that you're still loving it, but I think certainly from a fintech side of things, makes a lot of sense, right? I mean, UK probably capital of Europe from a fintech perspective, maybe globally. I don't know about that, but certainly in Europe. And so Capdesk brought you to the UK, but why did you start Capdesk at the age of 24, 25? Like, what was like this compelling problem that you needed to solve?
Yeah, so I for some reason became a country manager for an investment platform, so equity crowdfunding platform, quite similar to Seedrs or Crowdcube, but in the Nordics, something co-funded by me. And that's a different story how that happened. So I was actually working full time as that while I was studying, with basically helping companies of all sizes chop up the equity into 1,000 bits and sell them to God knows how many investors of all sizes as well. And I just clearly remember when doing that at one point I helped the company get, raise 200,000 euros from 400 investors, and I invested myself, right? And I got my, mom and my cousins and my friends all to invest in this case. And then when we've invested the money, and I mean, 100 euro back then was quite a lot for some of my friends. I just remember thinking, okay, where's the equity now? And I asked the investment platform, where's the equity? And they said, they're in spreadsheets. And then I was just facepalm, are you kidding me? Are we having this revolutionary new wave finance thing about basically subscribing people into a spreadsheet? And then afterwards, we just ditched the company with 400 shareholders who have given them 200,000 euros, which in the grand scheme of things is not a lot, right? And now they have to deal with those 200 shareholders who don't know where the shares are for the rest of the company's life. At the same time, the shareholders have no idea what a private share is, equity is. So they were expecting to look on something like a glorious dashboard with all sorts of colors and bells and whistles. And instead, they just request a spreadsheet once a year. So I looked into that. And they said, well, Christian, it's just, well, that's completely normal. That's what all private companies do. And back in 2014-15, I went to one of my friends who's a Series B CTO and asked him, where's your equity? And he said, I think they're in a shareholder, I like they're in a spreadsheet. And then that was where I had my, emperor's new clothes moment. The private markets are wearing no clothes. Billions are being invested into faulty spreadsheets. Let me see if I can, create a platform and put private equity online. That was the beginning of Capdesk.
Very cool. Good story there. And also probably landed it with the name, right? Capdesk does exactly what it says. I know there are some competing kind of platforms, but perhaps like with their name that you couldn't necessarily understand 100% what they're doing. But when you look at Capdesk, it pretty much kind of like nails it and gives it away. Yeah, were you lucky? Were you one of the first to market there, or it's like how did you manage to kind of like snap that up?
Well, okay, this is not for for all listeners, but I'm going to tell you the story. So actually, before we were called Capbox. So I always just wanted something with Cap, and then I just envisioned this thing about just seeing things. Like I wasn't necessarily a finance person. I just wanted to create a dashboard somewhere where you could log in and you could see your shares, right? And then Cap, good name. It suits Cap. It's in cap table. It's sort of large cap, small caps. It's fine. And then Bucks. But I could only get capbox.co, .co. So my business agent at the time said, and this is a true story, he invested in something called Recon Instruments, and they had recon.co. And he said it turned into an absolutely disaster at one point because recon.com got snapped up by a gay fetish website. So that ruined a lot of brand awareness and brand recognition for them because their users would go into recon.com and then get a little bit offended. So he just said, Christian, you need to find a .com domain. And then super lucky, I just basically tried to, to find all sorts of weird ways of saying Bucks, and then Desk was one of them. And look at that, Capdesk.com. So quite lucky.
Very good, good. So in terms of understand like what it does and the problem that it's solving, and a big problem that I think say a lot of companies have, and perhaps in some instances they don't necessarily maybe know that they have, or that there are better ways of doing things. But what I want to chat to you again, like given your experience, is just around like offering equity to employees and like going a little bit like as deep as we can in kind of 30 minutes or less on that. So sound good to you? We jump into that?
Yeah, good. Maybe I'm not sure if I should tell what Capdesk does, so the people know what the platform does. But
exactly.
just in a
good. That'd be a good start for sure.
Yeah. But a good start what Capdesk does is that companies are staying private for longer. So that means that if you are like a Series A or a unicorn company, you might have hundreds of employees who all want equity, and you might have hundreds of shareholders all having equity, and those equity have different rights and are optimized by different tax laws and approvals. And for you as a company to keep track of that while staying private is one hot mess. So Capdesk is basically a dashboard, like an accounting platform, but for your equity, where we allow those private companies to stay private for longer and digitize all the equity and also trade the equity while staying private. And one of the things we have, and one of our purpose, is to democratize equity so that more stakeholders, so that more people in society can get their hands on equity in the company rather than just getting a paycheck. And one of the cool ways of distributing equity in a company is for using employee equity incentives, also called ESOPs.
Cool. Thank you for clarifying that. And then that obviously does then give us a stronger base to jump into the conversation. So let's kind of kick it off, like in terms of like the pros. Like why would the founders listening to this podcast give equity away? Why would they give ownership away to their startup that they're building, and they're potentially in their minds like putting the most into?
Well, I think there's a lot of different ways why this makes sense. But first of all, giving equity employees is one of the strongest alignment metrics you can do, or alignment securities you can give to your employees, because as an option or an equity grant is basically correlated to the share price. You as a CEO need to get the share price up, because you have investors who want to get the share price up. So if you can explain to the employee that they will get rewarded if they increase the share price, then you can tell them the exact same story as the board all the way down. So it's perfect for alignment. And if you want to get really, the people to put their heart and soul into this and actually care for the business and also set meaningful KPIs for the business. Keep in mind, if you work for a salary, you might not care about what happens in 3 years from now. But if you work for equity, well, those decisions you make today might be very relevant for you in 3 years from now, because it means whether your equity value is going to increase or decrease. But I also think, it creates more responsible companies. So if you basically decentralize ownership, right? So that everybody's got ownership and they take part of it, and they want to create good solutions and be proud of what they own, right? So I think it creates more responsible companies. And then, second of all, I feel very strongly about this. It's something we should speak much more about in European ecosystem. But it's this economic ripple effects in society, I think, that we've seen in the West Coast, Silicon Valley, that if you can give employees, if you can make them, millionaires or whatever, or give them a lot of money, then they can go out and become business angels for new companies. And then we can help, create an ecosystem which is much more, favorable for everybody there. So if we can get these secondaries to work, and if we can get, so if we can allow them to actually cash out as well, but also give them equity, then I think the economic ripple effects in society is going to increase really quickly. And that means better education, it means better research, it means better health, and it makes better decisions done in society. And lastly, I think, especially with this, these crazy generations we have like that right now, the Generation C and the Generation Ys and the millennials, people are very impact, they care a lot about impact. And I think equity can create that deeper meaning for employees, and not just working for a paycheck, but something else. And we've definitely seen that in Capdesk, but also the companies that we help.
It's a great point. Great points there, and we could probably dive into them all, and certainly around the US versus sort of Europe, so that perhaps a little bit ahead. And we, in terms of, I think companies that are generally having these equity kind of schemes, and in Europe it's a little bit less common. And there are some companies I see, and I think I've seen like Hanno from Personio, speak publicly about this a lot more in terms of Europe needs to do better, around this. So why do you think Europe is behind the US on that side of things?
Well, I think that's one of the key reasons why we are behind is that if you go 200 miles in either direction of most countries, you'll be in a completely different tax zone, a completely different country who doesn't even understand. You can't even buy the same things in the supermarket, right? And you see the same thing with the banks. Like each country have got like their own banks, even though that, there's not really any good inner market in Europe, especially within finance and especially within trading securities. So if you were to make your employees feel comfortable about tax in UK while it being in Denmark, you don't get that. So I think we need to streamline. This is not a main thing again, but we need to streamline. We need to streamline some policies about how tax and securities are dealt with in Europe, so that we can. That's one of the pros in the US, right? Is you can go basically anywhere in the US and you know what it is. So you've got a common understanding of what that security means, and you've got more people to help collaborate in terms of taking that security to the next level, and regulators also. Whereas in Denmark, being an example, that's where I come from. We have 6 million people. That's like a small borough. That's like a borough in London, right? And then we go around with all sorts of intelligent people inventing our own ways of doing this. Germany is doing the same thing now, as Hannah pointed out. So we need to streamline stuff.
Do you say? I mean, so you mentioned earlier. As the example in terms of companies that might use like a solution like Capdesk, generally like Series A right through to kind of unicorn. So in terms of giving out equity, do you think it's and from some of the points that you sort of mentioned, more valuable to give out equity for a company that wants to become a unicorn than to a company that has no aspirations to be a unicorn and say maybe wants to get to, I don't know, 10 million in revenue as their kind of goal, or be not quite, I don't know if you call that a lifestyle business, but probably be a good one. But yeah, what are your thoughts around that?
I think it's a very good question, and I think it depends on what you want to achieve with your program. with your share plan program. If you want to achieve, the same thing as when you invest in if you want to invest in BrewDog or, your local bakery, you probably know that a local bakery is not going to turn into the next Facebook, but perhaps it gives you some sort of, meaning, and it gives you the bragging rights to your friend that you own that equity. If that's a part of your decision to give it out, then, lifestyle businesses are fine. I think that's all right. I do feel quite passionate about this because I think the employee are not protected as well as the retail investor. So there's nothing to protect the employee. And therefore, if you give out equity as a financial motivator and a compensation, you need to be a growth company. You need to tell the employee that they're going to have access to liquidity. The only way to have liquidity is through doing an IPO, selling the company, going bankrupt in some cases, or doing a secondary. And if you're not planning on doing either of those, if you're just or buying the shares back, then you have an instrument which is not really, you can't really use for anything. And secondly, if you don't care about increasing equity value, then you might have a CEO who cares about break even but not increasing equity value. You can say a lot of crazy things about Elon Musk, but he's really good at getting good multiple out of their revenue, right? So there are certain CEOs you hire in order to get that revenue multiple up, which is good for all shareholders and equity holders. So you need to employee to know which sort of company am I in, and are they ambitious to get the share value up? Is there a liquidity event? And also, how does the cap table stack look like? Did they just bring in SoftBank with a 3x liquidation preference? Because that means I'm never going to see my return on exit, because SoftBank is going to get all the proceeds. So you need to understand those three parameters, I would say.
What about the cons? Like, why would a founder, again, who's listening, sort of hopefully not do this, not offer equity? Do you see any cons? I mean, obviously, I understand from your position that the more companies that offer equity, the better it is. The bigger market for you. But in what instances, are there cons?
Yeah, I think there's a lot of cons to it, right? It's not just all happy days. I mean, one of the things is that employee gets an option or award. That means that over time he has the right to purchase some shares and become a shareholder. When you're a shareholder, you have certain rights and certain information rights. So you're looking at having to communicate to employees. And sometimes if those employees and you're in a bad standing, they might not have your interest. So your employees become shareholders. And if you're not geared up to deal with that relationship, then you should not give out equity to your employees. Second of all is that you might be a business where it doesn't make sense. It doesn't make sense. Just like many businesses, it doesn't make sense to bring in an investor because it's just the wrong instruments to use, right? Maybe you shouldn't sell equity. Maybe you should take should borrow some money instead from the bank. There's different instruments for different purposes. And maybe if you're a lifestyle business and it's not the right instrument for you. Second of all, it's costly. You need to update the stuff. You need to go to company's house, HMRC, make sure that the valuation is right. There's a lot of liabilities. So there comes some great responsibility in issuing it. And you need to communicate to the employee. If you don't want to communicate to the employee what it's worth, then you shouldn't do it. However, I will still say that those are the risks with everything, that you have to invest in it properly to get the good effects out of it. The good effects, I told you, just come from day one. It's like, think about it as giving a fitness membership, gym membership, but not telling where the directions to the gym is. That's a little bit like how most equity programs are. You've got it, it's super annoying, but if you don't tell the directions to the gym, then nobody's going to care. And it's the same thing with equity.
Let's assume then we've got some founders on here that haven't given away equity yet, but they're looking to do it, right? They're looking to roll out the program. What would be the first steps, would you say? Like, what are the practical, pragmatic steps that you're going to need to take to kind of to roll this out to your team?
So the first thing is you start with looking at your cap table. So your cap table is basically a full list of people who owns what percentage of your company, how many shares they have. And you look at it on a fully diluted basis, and you might have two co-founders, so they've got 50% each. Founders got 50% each. And now you want to perhaps think about doing a business angel round. So I would always recommend perhaps making an option pool as part of an investment round to begin with. And I'll tell you why now. It's because you can do what's called a shuffle. So you can basically get the investor to pay for the option pool. So how that works is that the investor comes in and he might, buy 10% of the company. So that means you now have 40%. Your co-founder's got, so you've got 45%. Your co-founder's got 45%, and then the last investor's got 10%, right? Something about that. And then afterwards, you do an option pool, meaning that and that option pool is basically how much of the cap table, so how many shares are available for future employees, and what is the fully diluted position, how many percentage would that amount to in terms of the company. And when you do it that way, then you would see that the investor would get down to perhaps, let's just say 7.5%. You might go down to like 42.5%, and your co-founder might go down to 42.5%. So in this case, you have an investor to help pay for the option pool. That's a very good parameter to negotiate business angels rounds, ladies and gentlemen, because they will try to screw you over some of these business angels. So this is the trick 101. The option pool shuffle is called, and I think that's a great way to get started. So think about that for your business angel round, and think about doing this option pool shuffle to get it in afterwards as part of the deal. If you do it beforehand, then obviously what will happen is that he will need to dilute you further. So you will still have 45 and 10 because your option pool is 45, but then you have to, give out the last 10% from your own stake. So you'll end below 40%, and the option pool will already be less than 10%. It might be 8, right? And so it might be 7.5, 40, something like that, right? So that's why it's important to do the option pool shuffle. Once you've done that, you now have 10%. So let's just say that's like 5,000 shares you can give out to future employees. I would say that it's very important you use that early on, because the options are more worth the earlier you use it, and it's your only competitive advantage in terms of compensation to incumbents out there or larger corporations, because large corporations are not going to grow as quick as you do because you're starting from zero. So giving away equity early on is your biggest competitive advantage to get really good talent. It was one thing I learned the last 5 years, and I wish I did different, is find amazing talent and pay them well to begin with. So this is going to be very, very important for you. Not just find mediocre talent, but just find shit talent or juniors. Find really good people, and they would demand equity. So what you do now is you figure out which jurisdiction are you in. So let's just say in UK for some listeners, then you would probably figure out, okay, which security should I then use for my share plan, and which tax wrappers are there I can use. And you would figure out that EMI is perhaps Europe's best option plan program with big tax incentives. And that's EMI options. So you have to use options. So now you need to use options. Then you get an accountant, and the accountant will give you a valuation. So say this is the lowest price you can give to your employees. You want to get the strike price to be as low as possible. If your share price is in fact £50, you would like to see if you can get it to 10, 0.5. That's quite good, because then you've already given your employees value just from issuing it, and you can do that in the UK. Second of all, once you've done that, now you have your evaluation. You now do the option grant program. This is when you figure out how should my employee earn this. Let's just say that's 1,000 options, 1,000 shares. And then what you'll do is you'll typically put in a trial period saying he's not going to earn anything unless he stays here for a year. So that's what's called a cliff. Cliff is like your trial period, or the trial period. So after a year, he will then, after having waited for a year, he might get 20% of the 1,000. So he might be saying, hey, there you are, you now get XYZ options. And then after that, for the next 3 years in a row, he can then vest the remaining options maybe over month. That means that you're not going to give it out unless he stays there for a long time. And that's a good model. That's called a vesting schedule. So you get that vesting schedule and you put it in right. And then afterwards, you draw an option plan and an option agreement. And then you send that out to be signed. And once it's signed, then you use some sort of software like Capdesk to keep track of the vesting, so that you can check the vesting and how much is accrued in terms of shares you've promised them, and the employee can keep track of that, how many options he has accrued. And then you make sure to send some paperwork to HMRC of what you've done. You do that every year. We can also handle that in Capdesk. And that's basically the life cycle of an option until there's a trigger event, which is an exit or a secondary program or a buyback of options. And then you convert those options either through exercise or cashless exercise. So either the option holder buys them from the company and are now a shareholder, and what to do, they're a shareholder, or you get somebody to buy the shares on behalf of the employee. So you basically just, you get a buyer into the secondary transaction, where a buyer might be a big bank, says, I would like to buy up all of this employee's equity, and they get the difference between the exercise price, which is how much they have to pay for the shares, and the current share price. So
how long does typically the process take? So you say, okay, I've decided that I want to kind of do this. You have to get the valuation, like your starting point, you're on the phone to the accountants or sending them an email, right through to, you know, I'm now logged in on Capdesk and I'm just kind of looking at my share price, right? How long does that typically take? Is there a kind of a typical benchmark for that?
Yeah, so I think it all depends. It's everything. You can use some of these accountants or platforms that's like, you know, 1, 2, 3, here's a document you can use, and then you've got a valuation, you've got the document, you're started, right? That takes you like a week or something. In all instances, I would recommend, because there's just a lot of corner cases out there. The thing about equity is you don't know what you don't know, and equity changes over time. So retrospectively, if everything goes well in your company and you become a unicorn, all of a sudden those mistakes means, you know, hundreds or millions of pounds. So that's where I would always recommend getting some sort of lawyer or advisor in and speak to that advisor, saying, as an example, right? If you've got an employee in Denmark and you've got an employee in the UK, what do you do about, you know, the exercise price? Because the exercise price in the UK can be lower than in Denmark. So do you then grant more options in the UK than you do in Denmark, or do you keep the same exercise price? And what do you do if you want an employee from the US? Because then you need to have an international, you know, share plan program. And if you don't have that from the beginning, some people would say, well, why are you giving out more equity to your UK employees than me in the US? Why are you penalizing me for that? So there's all sorts of these weird things, and especially in this world, post-pandemic, where, you know, the whole world is your talent supermarket. I would make sure not to lock yourself down in a UK only template. So it can take a week, it can take 2 weeks, depends on the quality. And I saw you in terms of price, it can be everything from £3,000 to get it all sorted to 5,000 or even more, depending on the quality. And obviously, when you go through that seed round or Series A round, they would look at how the setup is, and they would probably win points or lose points depending on how robust that setup is as well. When you touch equity, this is something that's really going to be a trigger point for future investors. So do it properly. Don't try to hack it, ladies and gentlemen.
I'd be interested if you'd be happy to share like how Capdesk has really structured its equity in terms of like almost like a very kind of short mini case study. So yeah, like how have you guys done it?
Yeah, I mean, so we give everybody equity. If they're a full-time employee, we give everybody equity in Capdesk. We have been working on making some equity bands. So we have one of the things we had to do is just this Denmark and UK thing, where we actually had to get our exercise price, unfortunately, a little bit higher. But that's because we wanted to have the same price for both Danish, German. You know, everybody should have the same exercise price, so there's no favorable employees. It's the same thing. We are about to fix that some way or somehow. That's a different story. So we did that, and then I think we tried to do tiering, right? So we tried to tier and say, are you a junior? Are you a manager? Are you a senior? And then we try to use the senior banding work, and then we have made an equity calculator. So all hiring managers can go in and they can say, this is the salary, this is the seniority, and then we'll tell you how much equity you can grant to them. And I also think that's quite important to do, that you as a company, you need to set some parameters about equity. Just as there's a salary gap, there's also an equity gap in terms of minorities. And you as a founder, you need to just make sure that the ones who's best at negotiating doesn't get the most, so that it's spread equally around the organization, because it will cause havoc later on if you don't do that. So make a good salary band, some good salary bands based on this equity, and make sure to align your future hires with your board, so that you don't use up more shares than promised. Because it's quite embarrassing going back to your investor in my first example and saying, hey, we need to dilute you by 5% more because we need to issue more equity than we thought.
Have you, on the equity calculator, sort of like that, is it, would you say, I'm sure like each company is probably sort of different, but would there be value in an equity calculator being public, even if it was like a lead magnet tool for you guys, right? Where companies can go in and just kind of like have a play around and something like that. I don't know if you created something like that already.
Yeah, I mean, there's so many things we're trying to do like internally, which I'd like to do public, and actually all my employees are pushing me to do it. One of the things about being very purpose driven and being very like in the space is hypocrisy. So I want to make 100% sure that we've tested this with a good enough sampling size before I make it public, because I don't want for anything to come out where an employee says, well, Capdesk says to do this, but actually that doesn't work. And when they say they're the greatest, they aren't. The truth is we're still learning as well. We're getting data every time, and it is a new space, and especially having a global share plan, like having a global talent force where you don't want to discriminate either of them. It's super tricky, and it's how long is a piece of string, you're never really done. But I think we're testing it out right now with the hiring managers. After the hiring managers, we're probably going to open it up to the whole company, so the whole company can see exactly where they are. And then after opening up to the whole company, at each of those steps, we're probably going to get some pushback. Once you open up to the whole company and it works without significant pushback for over a year, we're probably going to make it public. Along with a lot of other things. And we're also going to one of the things we're working on, which I'm quite excited about, is that I'm working on also making an internal secondary market for Capdesk, so you can actually sell your equity once a year or something like that. That's something I'm very passionate about doing. So first of all, helping out how do you communicate the equity, how do you give out the equity, how do you communicate the equity, and then how do you also make sure that the equity is liquid, so it doesn't end up with me cashing out 50% of my shareholding and leaving all my employees behind the bus with a driver, without any bus driver. It needs to be equal, so everybody gets to cash out at the same time, and the board and shareholders is aligned with that. Sure. I think that's when you put something powerful.
No, definitely sounds exciting. And so you've given a bit of an insight in terms of like what's coming up and things that you're working on. As a business, sort of Capdesk, like what's next really for you over the next year? I mean, are you plans of growth? I'm sort of like talking about, are you raising that next round? If so, what it is, like the international expansion, going to like from how many employees now to how many, like what is the plan? Like what does growth look like for you?
Of course, we're I think about 15 employees right now, and we are raised our Series A round earlier this year, which got published, about £8 million in total, and we'll use that money right now to I think we're the best funded equity management software right now in UK, in Europe, which says more perhaps about the niche environment we're in, the market we're in, more rather than Capdesk, how successful we are. But we aim right now to just make sure that it spreads like wildfire across Europe, this whole equity revolution. And as I said, we are quite purpose driven, so we want to make sure that we can make, like, if there are good employees out there working for a tech company, they goddamn deserve to get equity. Just because they weren't born in Silicon Valley or London, they should still have equity. And we hope that we can inspire all of those companies to give out equity. Now there's a platform to do it, which is Capdesk, so it should be easier. And then we're just like when we came to the UK 4 years ago, where everybody thought we were crazy and this would be a space that we could never raise even 100K in funding, because why would you on earth work in this niche platform? We're seeing the same thing in the rest of Europe right now. It's still like early days, but over time, we'll get there. And then when everybody thinks about like when you think about the public market, you think about NASDAQ. When you think about private equity, you think about Capdesk, and you ask, where's my shares? If they're not in Capdesk, they don't exist. And when that happens, and you see Chewbacks for bakeries that needs to use Capdesk, just like you see with Zero, then the next step is for us to make sure that just like you can do with Monzo or Revolut, you can just transfer money to each other, then you can start transferring shares to each other. So that's the next revolution. And once you can start transferring shares to each other, then you just await which products we can build for the future and how we can reinvent the financial markets, because that's very exciting. So that's kind of the trajectory we're onto.
Sounds cool. Sounds good stuff. And where can people find you online and Capdesk as well?
So you can find me on LinkedIn. I should be Christian Gabriel on LinkedIn, or Gabriel Christian. So linkedin.com/Gabriel Christian. I'm on Twitter at Gabriel Denmark. And if people want to write me an email, it's christian@capdesk.com. And if you want to follow Capdesk, you can follow us on LinkedIn, Capdesk. We are on Instagram as well, at Capdesk. We're trying to be quite active there. If you want to look for a job at Capdesk, you can go to careers.capdesk.com. And if you just want to check out Capdesk yourself, it's capdesk.com. So straightforward. Awesome. Very lucky with that name.
Good stuff. Indeed. Good stuff. Well, Christian, been a pleasure talking to you, learning from you around this important topic. First time we've talked about sort of equity on the SaaS Revolution Show, in 6 years, right? So finally tick that box. So really appreciate you taking the time and going deep into that and sharing with the audience. So thanks so much, Christian Gabriel, CEO of Capdesk.
Thank you, Alex. Bye.